Long-term bond yields hit a 19-year high, while the dollar index slipped to its weakest level since early June. Your crypto gains are up because of this currency move, not rates. Tuesday, August 18th, 2026. Today's agenda: this is not an American bond story any. Bitcoin trades near $64,200. Housing gave the clearest signal this morning. A close beneath it says the breakout failed. Up next, Bitcoin trades near $64,200. More long-dated government debt sold off across almost every major market at once. The 30-year Treasury reached its highest yield since the middle of 2007, up close to 40 percentage points since the end of June. French 30-year yields hit their highest since September of 2008. Japanese 10-year yields touched a 3-decade peak. British 30-year gilts pushed towards 6%. And Bitcoin, which is supposed to hate exactly this, cleared $64,000 for the first time in 4 weeks. The connection runs through the currency, not the rate. The dollar index slipped to around 99, its weakest since early June. Gold pushed above $4,400 an ounce. Bitcoin gained about 2%. American stocks fell. Analysts at Barclays said the move in long yields is less about inflation than about deficits, heavy issuance, and the extra compensation investors now want for holding government paper. Now, the part that keeps this honest. If this were a genuine flight from paper money, the two assets built for that trade would be making records. Neither is. Gold sits roughly a fifth below its January peak. Bitcoin is near half its October record. One good session is not a regime change. But housing data tells us why building activity has stalled completely. The scoreboard: Bitcoin trades near $64,200 after a session range of roughly $62,600 to $64,500, and it has gone quiet this morning rather than extending. Ethereum sits right at $1,900. XRP has slipped to about 99 cents, losing a level that held all summer. Solana is near 76. Investor mood gauges disagree, from the high 30s on one tracker to the mid-40s on another, so take the direction and ignore the precision. The cross-asset picture is where the day lives. The 30-year Treasury yield reached just past 5.3%, the 10-year near 4.75, its highest since January of last year. The 2-year barely moved, and that is the tell that this is a long-end story rather than a policy rate story. The S&P 500 fell about 0.5% on Monday, giving back part of last week's record close near 7,800. Gold holds above 4,420. The levels, 64,000 now, has to hold rather than break. Above it, the August high near 65,200 is the gate. Below 62,500, the attempt has failed. That brings us to a close beneath it, says the breakout failed. Housing provided the clearest signal this morning, and the surface picture looked grim. Housing starts fell to an annual rate just under 1.25 million in July, down 12.4% from June and 13.5% year-over-year, missing expectations near 1.33 million. Completions dropped 9%, while building permits rose 5%. The pipeline is up, but construction activity is down. Quoting either metric alone tells a false story. Home Depot resolved the puzzle with earnings that beat on both lines, posting comparable sales growth of 1.7%. Its finance chief described the backdrop as frozen housing market conditions, where nobody is building and nobody is moving, everybody is renovating. Behind this sits the arithmetic driving bond markets. Federal debt is about to cross $40 trillion. The July deficit added $432 billion alone, while interest costs ran to $857 billion through 9 months, exceeding defense spending and Medicare combined. The meeting account publishes tomorrow at 2 a.m. Eastern. The interim understanding between Washington and Tehran has reached its formal expiry, with nothing ready to replace it. Iran's foreign minister stated that Tehran has not decided whether to resume talks. President Biden answered Iranian reparation demands by saying the U.S. should be compensated, telling Americans to expect higher pump prices while conflict continues. Traffic tells the real story. Only 5 commodity vessels moved through the Strait of Hormuz over the weekend. Iran and Oman appear to be edging toward their own arrangement for the waterway. The United States is not part of those talks, which explains why nobody is pricing a settlement yet. The chain into your screen remains short. Closed choke point, higher crude, elevated headline inflation, a central bank with less room, and a higher discount rate on every long-duration asset. Gulf producers are quietly moving large volumes despite the blockade, keeping crude from spiraling further out of control. Crude did the heavy lifting Monday. Brent settled up nearly 3% at just under $91 per barrel. West Texas was near $84.50. Both sit well below last spring's peak above $120, but are roughly one-third higher over 12 months. That yearly figure matters for policy. Last week's cool inflation prints leaned heavily on energy falling month over month, but Monday reversed that input. One session does not undo a trend, though the cleanest case for a September hold just got less clear. Gold holds above $4,420 per ounce, aided by the softer dollar and fading hike expectations. Central banks bought 289 tons last quarter, a record for that period according to the World Gold Council. Keep it in proportion. Gold is still roughly 1/5 below its January record. Even the strongest hard asset story on the board trades well under its own high. Here is the final word on why gold and crypto are moving differently today. Biggest risk, $62,500. A close beneath it says the breakout failed and put 60,000 back in play, and the fuel is the same thin book that made the move up so easy. The broader version is the long end. If 30-year yields keep climbing without the dollar falling further, the reason Bitcoin rose yesterday disappears. Biggest opportunity. A daily close above 64,000, then a clean break through the August high near 65,200. That would end 4 weeks of failure at one shelf. Conditions, not forecasts. 3 things to watch. 1. Later today, pending home sales at 10 Eastern, with 50% duties on more than 400 Canadian product classifications taking effect tomorrow. 2. Tomorrow, the July Federal Reserve minutes at 2 Eastern, plus a White House meeting involving crypto and prediction market firms the same day. 3. Thursday, the derivatives regulator's first innovation advisory session, then Friday's flash purchasing manager surveys before Jackson Hole opens on the 27th. One call. I expect Bitcoin's first attempt at 65,200 to fail before this week is out. Global debt sold off, while Bitcoin found support near $64,000 because the dollar index slipped to its weakest level since early June. Housing starts fell sharply as affordability issues froze new construction, yet permits rose due to renovation demand. Oil prices reversed lower inflation relief after a weekend deal in the Strait of Hormuz kept crude from running away. Investors should watch whether Bitcoin holds above $62,500 tomorrow morning. Dropping below that invalidates the positive setup for this week. Follow for more.